This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, across Bloomberg platforms. Carol Massar, Tim Stenovec, live here at Bloomberg headquarters in New York City. It's another busy day. It's another busy Friday here in 2026. Let's get to it on this March 20th. A headline just about an hour ago: Iranian officials have become reluctant to even discuss reopening the Strait of Hormuz as they are really focusing these continued battles and onslaught from both the U.S. and Israeli military. This is all according to a person familiar, involved in a direct high-level contacts with Tehran. So we did see oil prices in particular snap higher on that headline. They've backed off a little bit, but nonetheless, that is really our backdrop on this Friday.
Yeah, oil higher. WTI up $98 a barrel. Brent to $111 a barrel. Both of those up more than 2.3% today. And Carol, you guessed it. If anyone's been paying attention, stocks down, S&P down. Off its worst levels of the day, but still down a full percentage point.
Yeah, and a new narrative when it comes to U.S. Treasuries. We've seen yields higher, and we continue to see that on this Friday. So we're going to get into it. As Tim mentioned before we got going, $5.7 trillion triple watching Friday. So that could add some volatility into the trade. Spooky. And you also think about investors, basically. I heard Paul Sweeney earlier on Surveillance and on Bloomberg Intelligence kind of talking about how he remembers way back when he was trading, you wanted to close out positions. You wanted no risk going into a weekend. I don't know that we've totally seen that, but it's definitely been more of a risk-off trade this week.
And also, a lot depends on what happens over the weekend when it comes to the war in Iran and how those traders want to be positioned going into a weekend of geopolitical crisis. The question I think a lot of people have is boots on the ground. Is that a possibility?
Which is something we're going to dig into over the next 60 minutes. We're going to talk about that. It does seem like there's no end in sight to this war, so we're going to get the latest from the White House on the president's war in Iran, plus what may cripple our economy. It starts with the letter D, and no, we're not talking about depression, but it's something much more relative, and it, of course, connects to the war.
Can you give another hint where you can find it?
Sounds like diesel.
I was going to say at a gas station, but anyway. Also, prediction markets.
So much for the tease.
Yes, you'll find bets on the U.S. war in Iran and lots more. This, as the industry picks up steam, higher valuations, more partnerships. Ian McGinley is stopping by. He's former director of enforcement at the CFTC, and we're going all in on predictions.
And we got to say, you had an exclusive with one of the Kalshi co-founders.
Yeah, Tarek Mansour.
So we're going to, that whole idea of gambling, not gambling, as all of this seems to move forward. We're going to dig into that.
Yeah, look, people think it's gambling. The company says it's not.
Sounds
Courts
like a duck.
may be the ones who decide.
Walks like a duck.
Yeah, that's so they say.
Just going to say. All right, let's get you going on what that trade is on this Friday. Covering it all for us, of course, is our own Charlie Pellet. Charlie, take it away.
Thank you very much. Just had a print of 99 on West Texas Intermediate crude, pulling back just a tad right now. 98.65, up by 2.6%. Check out the spread to Brent crude. Barrel of Brent right now, 110.77. Brent up by almost 2%. We are watching oil. We're also watching the 10-year, 4.36% right now, with a 2-year, 3.88%. Bottom line here, equities lower across the board. S&P 500 index down 1% right now, down 68, 65.37 where we stand on the S&P 500 index. We have got the Dow Industrials down 269, drop there of 0.6%. NASDAQ down 335 on the NASDAQ Composite Index, a decline there of 1.5%. The VIX now above 26 with a 10-year, again 4.36%. Gold is down 1.6%, 45.74 the ounce on gold, and Bitcoin is trading lower by 0.8%, below 70K, 69,950 right now on Bitcoin. Again, WTI 98.65 a barrel right now, up 2.5%. Brent up 2%, 110.83. Oil majors pushing higher. ExxonMobil up 2%. Chevron up 1.2%. ConocoPhillips up 0.7, and as you would expect because of energy costs, airline names are lower. Again, recapping, S&P down 1%, and for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. All right, let's get to it. We've been tracking our live blog when it comes to the war. And a couple of the things in terms of the headlines. We mentioned this at the top. Iranian officials have become reluctant to even discuss reopening the Strait of Hormuz as they focus on surviving the U.S.-Israeli onslaught. That is according to a person involved in direct high-level contacts with Tehran. And the other thing is, and we are, hearing about this, reports about this, the Wall Street Journal, Tim, about the prospect of boots on the ground from the United States.
Well, the U.S. sending as many as 2,500 additional Marines, 3 warships to the Middle East. That's according to an earlier report by the Wall Street Journal. The U.S. also weighing an operation to occupy Kharg Island. Axios reported, adding that no decision has been made.
All right, so let's get to it. Let's head to the North Lawn of the White House. Try to get an understanding of the plan, the consensus. Is there any timeline, any end to this war? With us is, of course, Bloomberg News Washington and White House correspondent Jeff Mason. Jeff, good to be checking in with you. Here we are getting ready to enter our 4th week when it comes to the U.S. war in Iran. Is the president looking for an off-ramp? Like, what is kind of our way forward here? Do we have any clear idea?
Well, I heard the questions that you were just mentioning that you were going to ask. And the truth is, a lot of those questions are questions that only the president knows the answers to. Is he looking for an off-ramp? Possibly. Has he given mixed messages about that? Absolutely. He has said that he thinks that the U.S. is ahead of schedule with its operation. He has said before that he thinks that the war could end soon. But then, of course, the United States continues to attack and continues to be in a position really to continue this war for some time. And the reports from the Wall Street Journal and some other media organizations about troops being sent to the region would only underscore that.
What do we know about those troops? Again, the Wall Street Journal reporting that the U.S. is sending more Marines and warships to the Middle East. Does that indicate that the operation changes in some way? It moves from strikes from air to perhaps a different type of operation?
What I would say is one shouldn't necessarily assume that forces being sent or additional forces being sent to the Middle East equates with boots on the ground. Boots on the ground, I think most people would assume, means actual soldiers, actual American troops in Iran or on Kharg Island, for example, and that is not the same as reinforcing the multitude of bases and troops / forces that are already in the region. So I don't have the answer about what the president is eventually planning on doing. I did, however, have an opportunity to ask him about this yesterday in the Oval Office, and when I asked if he was planning to put boots on the ground or send more forces to the region, he said no. So again, mixed signals, but I don't think you can necessarily conclude from the reporting that we've seen by some of our colleagues that means boots on the ground is what is coming next.
Yeah, when it comes to, Jeff, mixed signals, I think about the Director of National Intelligence, Tulsi Gabbard, who was up there before a Senate committee answering questions about Iran and national intelligence leading up to the president, his decision to take the action against Iran. Contradictory statements by her and whether or not Iran was really a threat. I don't know if it really matters at this point because we're in a war, but I guess what I'm wondering is, so we have another story out on the Bloomberg about the president losing control of this war. Is he in control to find an off-ramp? Is there negotiating going on that, keeps the U.S. still in some kind of control of this situation, or is it kind of gone beyond that?
Well, I mean, we're getting a little bit into semantics there. What does it mean to be in control? Certainly the President of the United States is in control of what the U.S. forces do, and he's calling the shots about what happens next, and he gets to make the decision about an off-ramp and whether or not he's looking for one or whether he wants to stick around for a little bit longer. In terms of, is he losing control broadly of the ramifications of the decision that he made to go to launch these strikes against Iran? I mean, maybe if you look at the oil prices, which of course we've been talking about a lot, it doesn't seem like the White House was expecting that ramification. It doesn't seem like they were ready for the impact on the Strait of Hormuz. That said, the president also addressed that in the Oval Office yesterday and indicated he thought that oil prices would go even higher. But listen, we all know in the world of politics that spin is part of the gig, and I think it's probably fair to assume that there was a little bit of spin involved in that.
Hey, Jeff, before we let you go, the politics of this, especially ahead of the midterms in just a few short months, you're at the White House, you're in Washington. Republican lawmakers who may be up for re-election or maybe in vulnerable areas, to what extent do these higher prices move a focus from affordability, which is, we know, a very important issue for voters going into these midterms? To what extent does that possibly hurt Republicans in the midterms?
Oh, I mean, it could hurt them in a massive way. I mean, you're absolutely right to mention affordability. That was the buzzword 3 or 4 weeks ago before this war started. That was exactly what the White House wanted President Trump to be focusing on as he was at that time was supposed to be beginning a regular set of stops across the United States to talk about his economic agenda. You're not seeing him do that right now because he's running a war. And the affordability message will be a much harder one for this White House to get behind because of the prices that you're talking about. Energy prices, the prices at the pump, that's something that hits people in the pocketbook right away, every day. And I think to your broader question, will that hurt Republicans in November? It really depends on how long this war lasts, and it depends on how quickly oil prices recover once the war concludes. And we just don't know the answers to those questions, but we certainly know that that's something that they're thinking about here and within the Republican Party.
Is there anything, just before we go, sorry, I'm going to add on a question, 40
Please.
seconds here, Jeff. What aren't we talking about as we are focused so much on the war? I know we always ask this because we know we have a president who often can move us around in terms of what we focus on.
The weave.
So I'm just wondering,
indeed.
what aren't we watching that's also going on in Washington right now or at the White House?
Well, the Department of Homeland Security is still closed. I mean, there's still a partial government shutdown here. Immigration policy has been shifted a little bit out of the headlines because of this war, but the impact of that on airports, on TSA, and also just the continued ramifications of the killings of 2 U.S. citizens this year. I mean, that wasn't last year. Those are still big stories that are getting less attention because of this conflict.
All right. Well, great as always to check in with you. Jeff Mason, of course, there on the North Lawn of the White House. He's Bloomberg News Washington and White House correspondent. Hey, we're going to stay on the U.S. war in Iran and really what it may mean if President Trump loses control of the war. We asked Jeff about it, but it's also top line headline of a story that's on the Bloomberg terminal.
Trump reportedly considering options to escalate U.S. pressure on Iran, including deploying troops or striking oil infrastructure, which would be highly escalatory moves with steep political risks. Bloomberg Economics senior geoeconomics analyst for Asia Pacific, Adam Farrar, joins us from our Washington, D.C. bureau. What does it mean to you and the team for the president to potentially be losing control? How do you use that word?
So I think this all flows directly from this question of what the actual objectives are for the war and how the president sees success. You know, when we look out right now at the war and the current situation, it's unclear how the United States and the president can declare victory without laying out for the American people what it is he sought to achieve. We've seen varying forms of him laying that out, whether it be from detailing blowing up and destroying the ballistic missile force and the Navy, which, you know, we've seen a lot of effort to do, and it sounds like has been rather successful, but then also looking for the Iranian regime to capitulate and or fall directly. And with that question looming over all of this, we have now a shifting narrative. If we think back just a couple days or a week, Iran seemed to be fully on their back foot, lashing out, but having suffered a massive hit from the U.S. and Israel. But here, after further increases in oil prices and clarity that the United States cannot quickly reopen the strait, it seems to be shifting significantly. And the statements from Iran's leader today seem to imply that they certainly seem to see it that way. And so that raises questions as to how the president can move forward here and whether he still feels it's possible to declare victory in the short term, or he has to escalate with the hope of forcing the Iranians to de-escalate, which has not been successful so far.
Two very different options. I mean, does one say to you that if he continues to move forward, which it seems to be the case at this point, although we're talking about boots on the ground and whether or not that will happen ultimately, but does that to you then say, or you and the team, that potentially the president is losing control of this war if he continues to move forward?
So I think the problem we're seeing here is, again, not about the president, as we just heard before, losing control of the actions that are happening, but really the unanticipated, or in some cases very anticipated, consequences of the war continuing. The longer this goes, the greater the impact on the global economy and the greater the impact on U.S. forces, right? On that front, we had a U.S. aircraft that was apparently hit by Iranian fire, make an emergency landing yesterday. Things like that are going to increase and keep happening. Accidents will happen, and the Iranians will get lucky. And that raises the political and the cost of lives in this conflict. And on the economic side, we're seeing it day to day. The rise in oil prices are putting pressure on everything around the globe, with inflation being the key word right now. That's starting heavily to impact economies in East Asia and Asia writ large that are most reliant on the Strait of Hormuz, but that will spread to the United States as well, impacting what is already seen as an affordability crisis. So I think those are the factors that stand to kind of increase without movement towards de-escalation in the short term.
You know, Adam, I'm glad you brought up other countries here, because as Carol often reminds us, what happens there is not a vacuum, and we have to look at Iran. We have to not just look at Iran in the Middle East, but we have to look at China, we have to look at Russia, we have to look at Ukraine. And we got a headline earlier today about how the Kremlin would potentially stop sharing intel with Iran if the U.S. cut off aid to Ukraine. What are you watching in that region and sort of the dynamics that Putin is playing with regard to Iran?
Yeah, the offer from the Kremlin certainly seemed too cute by half, right? This effort to try and equate the two wars together and highlight that its support of Iran is no different than the U.S. support of Ukraine. And there's no doubt that Moscow is likely relishing in that moment. And as you said, though, there are clear consequences of this war already, and what happens if it continues on other conflicts or potential conflicts. In Ukraine, the biggest clear problem is this question of U.S. hardware, and particularly interceptor missiles, and how many may be available to provide to Ukraine so they can continue to defend their cities and their territory writ large from the onslaught of Russian ballistic missiles and drones. And when we look to the Indo-Pacific, every day the United States is using exquisite weaponry that would be needed in a conflict if something were to occur in the South China Sea or over Taiwan with China. And there's no doubt that Beijing has taken note of that. And, as you've heard from countless experts, the timeline to produce and rearm for the United States is not a question of weeks or months, but likely years. Wow. And that will change how the United States can conduct its operations anywhere in the world, but particularly in the Indo-Pacific.
And that Putin headline offers to help to stop sharing intel with Iran. That came from Politico, and Politico also reported that the U.S., Carol, rejected the Putin offer for Iran-Ukraine quid pro quo.
Yeah, there's just, it's like this giant chessboard, and I just think about
a game of Risk.
But I feel like I need more than just two people playing, because it just feels like there's so many pieces. And this is what you guys do, Adam. You think about the geoeconomic implications of all of this. You guys, we keep thinking about what all of this is doing to the global economy, and it does feel like we're going to be a different world going forward. I can't tell whether that's a better world and more collaborative, or are we going to be more divided after this? How are you guys continuing to report that out and think about it?
So we're certainly trying to keep our eyes outside of the region and for example, focusing on the things that are happening that are still very consequential for the global economy and for the United States, like Prime Minister Takaichi of Japan's visit yesterday to the White House. That visit was originally all about China. It was all about framing Japan's interests and keeping, as Japan has hoped, the United States in line as it negotiates with Beijing in what was supposed to be a meeting just a couple days from now, but has now been delayed between President Trump and President Xi. But even there, we saw the direct impacts of the war. We saw pressure on her and Japan to live up to the president's expectations, but also this move now for Japan to buy more oil from the United States and decrease its reliance on the Middle East, given this type of conflict. And I think we're going to see lots of changes spiraling out from the war, some anticipated and some not.
All right, so glad we could check in with you once again. Adam Farrar, he's Bloomberg Economics, Senior Geoeconomics Analyst for Asia Pacific. Coming up, the industry that's picking up steam, higher valuations. Yes, we're going to talk prediction markets with a former Director of Enforcement at the CFTC.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Developing story headline right now on the Bloomberg Professional Service involving Kalshi. Kalshi has been banned from operating in Nevada for now by a state judge. Again, the headline right now on the Bloomberg Professional Service: Kalshi banned from operating in Nevada for now by a state judge. Energy markets higher. The Dow, the S&P, NASDAQ all lower. Just getting another headline involving Iraq. Iraq has declared a force majeure on foreign-run oil fields. Now, that's according to Reuters. A force majeure, by the way, is a legal clause that is found in contracts that frees parties from liability or obligation when an extraordinary event or circumstance beyond their control prevents them from fulfilling a contract. Right now, West Texas Intermediate crude $98.51 a barrel, up 2.5%. Look at the spread with Brent. Brent crude above $111 right now. Brent up by 2.7%. The Dow lower by 416 points, down 0.9. We got the S&P down 89. Yes, low of the day right now, down 1.4%. NASDAQ down 406 now, a decline there of 1.8%. Keep it locked into Bloomberg Television and Radio right through the close to see how things shake out. The VIX above 27 now. The 10-year 4.38% with the 2-year 3.88%. Spot gold down 109 the ounce to 45.40, drop there of 2.3%. And West Texas Intermediate crude $98.45 a barrel. WTI up right now by 2.4%. Recapping, stocks lower. Oil higher, S&P down 1.4%. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. All right, a lot going on, as we said, this Friday, continuing to monitor, of course, the latest on the war, and we'll bring you any new headlines. In the meantime, speaking of headlines, just one crossing the Bloomberg terminal, Kalshi, temporarily barred by a judge from offering its prediction market contracts in Nevada after state regulators said the company did not have a gaming license. The state court judge ruling in Carson City, signing a temporary restraining order, blocking Kalshi event contracts for sports, election, and entertainment. This is according to a copy of the order provided by the Nevada Gaming Control Board. The judge, meantime, setting a hearing, Tim, in the case for April 3rd.
Well, it's not the only bit of news. The MLB has entered a new agreement with Polymarket and the federal regulator that oversees prediction markets. Also, yesterday, Kalshi raised more than $1 billion at a valuation of $22 billion in a new financing round. And speaking of Kalshi, criminal charges just this week, Carol, amping up growing state resistance to the company.
I'm just going to mention, just because stocks did take a leg down, and I know this is off our live blog. We're waiting for some more confirmation, but our live blog even saying that CBS is citing multiple sources on U.S. preparations in Iran, and that is that the U.S. making preparations for potential ground troops in Iran. So this is something we kicked off the hour with, but because we did see stocks take a leg down, I just wanted to bring that to everybody's attention.
Okay, let's get back to prediction markets and bring in Ian McGinley.
We said it was busy.
He's a partner at Sidley Austin. He's a former director of enforcement at the CFTC. It's the Commodities Futures Trading Commission. That was from 2023 to early 2025. He joins us here in the studio. Welcome. It's good to have you on the program. It's happening so quickly when it comes to interest in prediction markets. I just want to get your response on this news from Nevada, because it does seem like state after state is going after these companies and this company. And maybe it has to do with gambling revenues. Maybe it has to do with other lobbyists. I don't know. Can the states actually bar this company from doing business in different states?
Well, what happened today in Nevada is called a temporary restraining order. So they can, but usually for a small period of time, and then they have to have a hearing, a full hearing before a judge, where they'll then decide if that's a permanent ban. We've seen other states take very similar steps. What usually happens is there's then some litigation in federal court. This is a state court judge. And whether it then goes back to state court or the federal judge handles it, it really depends. But this other states have done similar things.
You know, I can't tell, Ian, if we're putting the cart before the horse here. In other words, it feels like crypto, where things kind of moved ahead, and we haven't kind of put in place the safety infrastructure, the regulatory infrastructure. And I look at valuations growing. I mean, is everything getting ahead of itself? Do we need at this point regulators to set some things up here?
Well, so there's a few things going on. And like you said, there is a lot going on, right? On the one hand, you have legal regulatory developments. On the other hand, you have just the businesses growing tremendously,
right.
Sponsorships.
MLB is pretty serious.
I mean, that is a huge endorsement of the type of trading. But I think there's a few things. There is regulation. There was insider trade.
Right.
Yeah, and I think that's something that people need to realize. And when there are talks about insider trading and things like that, that is prohibited. Always has been. There's a little bit of nuance to it. But the CFTC recently this week put out something called a notice of proposed rulemaking. Mm-hmm. Basically said, we want comments from the public, whether you are the states, businesses, sports leagues, and we're going to consider that because we are considering regulation. So we don't know the form of that regulation.
Right.
It's not come out yet, of course, but it certainly suggests that the CFTC is considering regulation and that there will be some more regulation and potentially some contracts that are not listed.
So, but should the world then slow down a little bit until we understand all of this, or no?
Well, we'll see what the courts say. I think that's where we'll see a real kind of scope of where things should go. You are allowed to self-certify your contracts. That is a regulatory regime the CFTC has. Now, the CFTC can step in and stop that, and so we'll see if that happens. But right now, where the kind of guardrails are coming from is existing CFTC law, mm-hmm. and then court decisions. You mentioned there was a criminal a case that came down this past week, and these are just my personal views on it, not those of my firm or any clients. But that was noteworthy, and it's the first criminal case in the space, right? Whether or not it relates to a temporary restraining order, which is a civil matter, probably not. But we'll see. But, that criminal case is interesting, though, because it doesn't charge any individuals. It is all misdemeanors. And any accusation, of course, should be taken seriously. But felonies are the more serious charge, not misdemeanors. And if you look at the charging instrument, we were talking a little bit about it. It just lays out that there were trades on a certain platform. Mm-hmm. It doesn't, when I was a federal prosecutor, you have a choice when you release a charging document. You can do something called like a speaking indictment or a speaking instrument where you lay out kind of all the facts and what you know. Based on this, they did not do that.
What's a potential outcome here when it comes to the way that courts rule on this? And I think a lot of people agree that this goes right to the Supreme Court either this year or next year. Is there a chance the Supreme Court comes out and says, okay, prediction markets can operate in the United States, but they can't include sports predictions, for example. They can include other things, but can't include sports predictions. Like, what would a case, I don't know, I'm just theoretically, what would a case potentially look like, or a decision potentially look like from the Supreme Court that would clarify this for us, for users, for these companies?
Well, so the Supreme Court really answers narrow questions. That's one thing to think about. We saw this in the tariff decision, and there was a dissent that I think spelled this out, where the Supreme Court will weigh in on the most narrow issue that it's presented with. So you could see the issue here is preemption, so whether federal law or state law applies. But it's very rare that the Supreme Court or any other court takes the next step and says, well, now here's how it should be regulated, or here are the particular. That's where the agency comes in.
So there's a chance. So the question would be whether or not the CFTC is the regulator versus the states are the regulators.
That I think is going to be the main question. Now, there may be some nuance in there as to what is the definition of something that's a swap. What can be traded?
Why does the CFTC regulate these prediction markets, but states regulate FanDuel and DraftKings?
Well, the difference, I think the argument is the difference in the structure of how they're, and at a very basic level, right, you are betting against the house. And when you think of traditional, right, traditional gaming and gambling, in these models in prediction markets, you have counterparties, right, some that are institutional, liquidity providers now. It's becoming a lot more like a stock market.
On that point, I mean, one of the things that keeps coming up, and it certainly did in the panel that you did down in Florida, about this idea of whether or not prediction markets are gambling. It came up over and over. And you did speak exclusively with the Kalshi co-founder, Tarek Mansour. Let's listen to what he had to say.
There's always been a battle of whether financial derivatives are gambling. Grain futures were called gambling in the 1800s. And there was a Supreme Court decision that, said even though there is speculation, these, products have are structured as the financial markets and thus are going to fall under financial market jurisdiction. So I always say this, whether something feels and looks like gambling doesn't necessarily make it gambling. Speculation exists in all financial markets. If we're going to take a line that speculation is gambling, then the stock market with retail participation is gambling. Then buying options for retail or 0 day to expiry options is gambling. Then retail buying crypto is gambling.
So that, of course, is Kalshi co-founder Tariq Mansour. We're talking with Ian McGinley, partner of Sidley Austin, former director of enforcement at the CFTC. So does he have a good point? Or is there a distinction between what happens on prediction markets versus what happens in financial markets, whether it's derivatives or, you name it?
Well, I think the point from a lawyer's standpoint is the Commodity Exchange Act doesn't define gambling. That's kind of why, and that's what the CFTC implements. That's its statute, and so that's where we've seen a lot of courts come in and try to distill the concept down. Now, there's a concept in federal law, CFTC law, that talks about gaming, but it also doesn't define it. And so that's why I think you see regulators now. When I was at the CFTC, there was an effort to further define gaming, and it looked at, is it a game of, for example, a game of skill or a game of chance? And so I think that's where you'll see regulators go. But the reason why, and you mentioned all the courts and the different decisions. You have district courts, you have appellate courts, and you have the Supreme Court. There have been different decisions on a district court level. I mean, you guys know lawyers. You can't get lawyers to agree on anything, right? So now we're at three appellate courts, right, that are now dealing with it, and we'll see how they come out. And then, I agree. I think likely we see it in the Supreme Court because I don't know that all those courts are going to look at it exactly the same way.
You were formerly director of enforcement at the CFTC, and I think one thing that's notable to people is the way the CFTC has come out as essentially been a loud cheerleader, a proponent of these platforms under Mike Selig. I'm wondering your view on that. Like, why do you think the CFTC is in this position to sort of not necessarily promote them, but to come out on X after the Arizona decision and say essentially this is an overstep?
Well, some of it is jurisdictional. Agencies, typically defend their jurisdiction. But I read it a little bit more nuanced.
Okay.
Where I think the CFTC, my read of what they are saying is, yes, this is our jurisdiction, but there need to be guardrails. At the same time they put out a notice for proposed rulemaking, they put out an advisory. That advisory was essentially, as I read it, a notice to the exchanges to say, when you register as an exchange for the CFTC, you have to make representations. You have to say these contracts are not susceptible to manipulation. We have adequate surveillance. And I read the CFTC putting out that advisory as saying, hey, everyone, you're on fair notice.
Yeah.
You have a job as a registrant to police yourselves, but if you don't fulfill that, we're here.
Same deal for prediction markets, that they have to do this.
Oh, yeah. They do. Yeah, they do have that obligation.
Great stuff. Ian McGinley, partner at Sidley Austin, former director of enforcement at the CFTC. This is Bloomberg.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. Lows of the day for the U.S. stock market. The Dow, the S&P, NASDAQ, all in the red. This is energy pushes higher. West Texas Intermediate crude, $98.32 a barrel, up right now by 2.3%. Brent crude, $112. Check out the spread there. 98 on WTI, 112 on Brent. Brent crude up now by 3.6%. Brent, of course, the global benchmark. The Dow, the S&P, NASDAQ, they're all in the red. S&P down 96 now at 6509. That is a drop of 1.5%. Dow Industrials down 480 on the Dow, a decline right now of 1%. The NASDAQ Composite Index down 437 for NASDAQ, a drop of 2%. The VIX above 27, the 10-year 4.38% with a 2-year 3.88%. Gold now at $45.45 the ounce, down 2.2%, and West Texas Intermediate crude $98.32 a barrel, up by 2.3%. President Trump has released a national framework for regulating artificial intelligence, laying the groundwork for Congress to create a federal standard for the technology. The framework, which builds upon Trump's December executive order, calls for online safeguards for children, less stringent permitting requirements so data centers can generate power on site, and preventing censorship. Recapping, S&P right now down 95 for the S&P, a drop of 1.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Charlie, of course, breaking out the markets. We do want to mention, too, once again, that Brent crude did hit session highs above $112 a barrel. That after that CBS report about the administration, some consideration perhaps when it comes to putting boots on the ground in Iran. Again, that U.S. Is actually preparing ground troops in Iran. This is coming from CBS. We want to be careful about it, but we did see oil markets, understandably so, spiking up again. And we did see stocks. They are now pretty much at their lows of the session.
Also, red headline coming about 90 minutes ago at this point, Iran sticking to its hardline position on the Strait of Hormuz. We're monitoring oil's exports. They hinge on that small outpost in the Persian Gulf, Karg Island. It's the loading point for almost all of the country's crude shipments. The president said the U.S. bombarded military targets on the island, Carol, last Friday, but spared its oil infrastructure. Since then, an idea has gained momentum with some advisors that there could be a U.S. invasion of the island. Others have expressed concern not only about the military risks, but that it could trigger another spike in oil prices.
Right, trying to figure this out, right, and kind of what comes next. We, of course, continue to track how all of this impacts global oil and energy markets. And we do want to bring you to a story that caught our attention. And this is how our team, too, is continuing to think about how the U.S. war in Iran is impacting global markets, global economy, and in particular, to the U.S. economy. And as they wrote in this great read, for one small business owner, it could mean a crippling of the U.S. economy. So let's dig into this. We are delighted to have with us Bloomberg News oil reporter Nathan Risser. He is in our Bloomberg Houston bureau. So Nathan, good to have you here with us. Great story. Before we dig into it, though, you are in Houston. I have a lot of family throughout the state of Texas. Such an important area when it comes to the U.S. energy and oil markets. What are the conversations that folks are having in the oil industry in Texas and Houston about the impact this war is having?
Hey, yeah, thanks for having me. As you can tell, we're having some lovely weather in Houston right now. I mean, one of the big conversations we're having here is how does it disrupt the oil or the price of oil that's flowing to the huge refining and petrochemical corridor that's just 20 minutes down the road from me here in Houston, Texas. And as we reported earlier today, we're seeing some of that impact on diesel prices. I mean, in America, we love to talk about gasoline. It's what millions of people every morning see when they're driving to work. But the pain point at the moment really feels like it's diesel, which crossed the $5 threshold this weekend, which is a level we haven't seen since 2022 and the early days of the Russia-Ukraine conflict.
What is the relationship to diesel's price and the inputs that make diesel? Because these are not the highest oil prices that we've seen by any means. But like you said, diesel's only been $5 a gallon at one point ever before, and that was back in 2022. But oil prices have been higher than they were in 2022, back in 2008. So what is it about this environment that gets diesel up to $5 a gallon?
Yeah, so across fuels, the biggest input is always oil. That's what drives the largest part of the gallon cost of either gasoline or diesel. But we came into this year, especially in the US, with kind of low stocks compared to the 10-year average for diesel. So naturally, when inventories are low, that can create a more volatile environment for the fuel. Another big factor is, all oil isn't equal. We have lighter grades, we have heavier grades. In West Texas, we're pumping 13 million barrels a day of light crude that's really good for making gasoline. But what's being curtailed and constrained in the Strait of Hormuz are these heavier grades, which are generally better alongside Venezuelan and Canadian oils for making that diesel. So this conflict has affected the barrels that are better at making that fuel. And that's one of the reasons we've seen some higher price spikes for diesel than for gasoline.
Nathan, as you and the team report out, given its ubiquitousness, diesel's rising costs create higher prices for just about anything further down the supply chain, be it lumber hauled on railway, flat cars, or green peppers shipped to your local grocery store. Like, we have to think about
it's everything.
How it filters through. Having said that, you do kick off the story, you guys do, and you quote somebody, a small business owner, that said, this is going to cripple our economy. I don't think people think about how much the economy rides on diesel fuel. Tell us about this individual, because by telling those small stories, or those small business owners, backbone of our economy, we kind of learn a lot.
Yeah, I mean, if we think about it in terms of numbers, in the U.S., we're consuming 4 million barrels a day of diesel. 75% of that goes into transportation. And that's not just your 18-wheelers trucking, big logs across the Pacific Northwest. That's this person we spoke to who sells firewood in the northeast of England. Northeast of America. And so the impact we're seeing of this fuel hitting $5 a gallon, it's not just these big industrial purposes, be it trucking or running tractors. It's going down to mom and pop stores. Another person we spoke to later in the story is a landscape contractor here in Houston, and he's got to buy that fuel for his trucks that carries his equipment, and also buy fuel for his lawnmowers and what he's actually doing his work with.
Yeah, and this is exactly what the Fed was trying to figure out this week, and what we've been trying to figure out. If this landscaper has to spend more on fuel, if this producer of firewood has to spend $11,000 a month instead of $6,000 a month on this fuel, what does it mean for customers? But also, what does it mean for how they're spending other money? How do you look at that in the way that the diesel prices ripple through the economy, not just in the context of they go through everything, but how people pull back on other things when this stuff gets more expensive?
Yeah, I think one of the landscaper's comments was really interesting, which is that for now, he's not adding costs to his services. He's not adding a fuel charge like some might, because he sees this as an opportunity to gain some market share. But down the line, there is a point he'll eventually have to. And I think that's really emblematic of the point we're in the diesel price spike, which is that people are assessing their options and may ultimately be forced into raising their prices at some point down the line, but we're not necessarily there yet.
Yeah, right. This goes back to kind of what is really the main focal point when we think about this U.S. war in Iran, like how long this goes on. Interesting, because on a day when we've got CBS reporting that the administration might be thinking perhaps about putting or getting ready to put troops on the ground, like does that mean that that's a further escalation? Does that mean this goes on longer, or is that a means to bringing this to an end? And I guess that's what we have to all kind of figure out. But that's how you have to figure out, right? All these business owners, they must be just watching closely to figure out how long this goes on.
Yeah, and I think the interesting thing is if we compare gasoline and diesel again, a consumer can cut down on their trips, right? If you're dropping your kid at school in the morning, you can tag on your shop. Maybe that's going to cut some of your weekly mileage. The average diesel consumer can't do that. They have set trucking routes, they have set customers they need to meet. So that's kind of why we're so interested in this fuel as a barometer, because it's a harder one to economize on in America.
All right, well, so appreciate it. Nathan, thanks so much. Bloomberg News oil reporter Nathan Risser joining us, of course, on his story out on the Bloomberg from our Bloomberg Businessweek team. Really interesting read. Yeah,
it's a great read. This is going to cripple our economy. Diesel spooks businesses. Check it out at Bloomberg.com and on the Bloomberg terminal.
All right, folks, we are headed for a break right now. I'm looking at a market that we have definitely seen a leg lower on that CBS report of the possibility of the administration getting ready to put troops on the ground. We're pretty much at our lows of the session. We're going to talk markets and stocks on the move in a moment.